Good evening. This is Doc Severson for the TheoTrade report for Tuesday, March 14th. Happy Pi Day. So look, guys, everybody's making a big deal out of tomorrow. Tomorrow is one of the big 4 FOMC meetings that we have during the year. And right now we're looking at a 93% probability that Janet Yellen is going to raise interest rates a quarter point. Okay, so you can also look forward to what the market sort of thinks that the rate curve is going to look like through the years, through the rest of 2017, 2018, 2019, and then longer. So it looks like we're heading towards maybe 3 to 4% rates going forward a couple of years. Well, guess what? We can already see that the 10-year note is up at about 2.6%, and the dollar index is ultimately still breaking higher right now. So what tomorrow's performance all comes down to, as it normally does, is two things. Really, certainty, number one, and number two, making sure that there's no hidden surprises. Now, Janet Yellen's done an awfully good job of that over the last couple of years of learning the whole Fed speak thing, learning how to be able to talk without putting, foot into mouth and saying something that she regrets later. She's actually done a very, very good job of doing that. And that's always a possibility when you come into an open conference environment, that you could be throwing a curveball that you don't necessarily handle the question very well. That happened to Bernanke early in his career. That also happened to Yellen early in her tenure, but not lately. She's done a very, very good job of that. So right now, what we're seeing on the fear indications, right? If we look at the VIX futures right now, we're seeing very, very low values. So there's really very little risk that's being priced into tomorrow. Everybody kind of knows everything. This is the most transparent Fed that we've really ever had. Unlike the Greenspan Fed of 15 to 20 years ago, where you're never really sure what was going to happen, even to some degree the Bernanke Fed into about 10 years ago, where you were never really sure what was about to happen. So now we have quite the opposite of that. We have a lot more transparency, even though we still have various members of the Fed jawboning out there and giving different messages depending on what their own axe is to grind. Still is going to happen. Can't do anything about that, but still, overall, the overall Fed policy body has done a remarkably good job lately of really taking risk out of the market. But is it too much? Is it too much? As we look at the S&P, this is where we start to say, whoa, we've gone so far, so fast right now, everybody is not looking for any risk. And what I'm seeing in the markets, and I've been seeing this for quite some time now, for the last few weeks, is that what the markets really need is a good period of base building. Very similar to what we've seen in other conditions that were similar to this, where we had extraordinary rallies. Each one of these built a base before it was able to climb on top of this. Right now, we have not built any kind of a base. This over here, over the last 5 days in the market, is not a base. A true base comes when you actually get a little bit of fear coming into the market. You get a little bit of panic selling. You get a little bit of profit taking. You get the weak hands that held their nose and jumped in up here at the very highs, all of a sudden have to bail out and sell into that. This is how markets move like this. This is how markets consolidate. And so far, we are well overdue for a move like this. Now, the market can do this whenever it wants to. There's no timeline that I can sit there and say, well, come on, time's ticking. Let's get to it. We've gone through this every single time we've had one of these conditions where it's seemingly the market will go on further and further and further than it ever has any right to do so before everybody quits looking for a correction, and then it occurs. So in my mind, probably the thing that would create the greatest amount of pain that's out there, and always has to be factored in, is what is the condition that would cause the greatest amount of pain? Realistically would cause the greatest amount of pain would be tomorrow for everything to play out according to Hoyle. Yellen stripes one right down the center of the fairway, 300 yards, if you can imagine that, right? So knocks one out of the park, does everything on the Fed announcement and the conference call after that According to Hoyle, everything just goes perfectly. We may have a pretty good reaction to the market, to the upside. And all of a sudden, we're going to see all of the press and all of the stock variance media that's out there saying, oh, this is great. The market's clear now to rally into perpetuity. Well, typically, this is where we're going to find a sell the news announcement. Did we not have one of these just the other day right after the State of the Union address? Well, I guess that was a couple of weeks ago now. After the State of the Union address, that created the perfect sell the news announcement, and we were rewarded with 1, 2, 3, 4, 5, 6 straight days of selling. Okay. Now, this was very mild selling. We have really not seen real selling. But to build this range, this is what we have to do, is we have to create this systemic disappointment over and over again. So we get good news that gets sold into and then it sells down again. Disappointment. Disappointment. Good news that gets sold into again. Disappointment. This is how we build the range that we need. So for this chart to go, I don't care if you're a bull or a bear, for this chart to go higher, it has got to take a step back first. To take 2 steps forward, it's got to take 1 step back first to build this bigger range. Now, the options market also knows something about this. If we look over here at the S&P 500 for 15 March options, which expire tomorrow, we can see that we have a plus minus 15-point move, which in today's world is a pretty decent move. A 15-point move for just one day for a typical Fed meeting. This is kind of starting to smell like one of the old Fed meetings where we used to get some pretty big movements from this. So again, I think the recipe tomorrow is starting to lean towards a positive reaction as certainty comes into the market where everybody says, wow, that was exactly what we had hoped to hear. That's exactly what we thought we would hear. And so the market celebrates certainty by going to the upside. I think that creates another sell the news event. Even if it's a very minor sell the news event, we just simply have too much complacency right now for this market to continue unabated to the upside. And folks, that is it for today's report. Thanks for listening, and we'll see you tomorrow.